Want to know something crazy? I'm gonna tell you something crazy. What up, everybody? I don't even know where to begin. Like, man, it's so much going on right now. You got the war with Ukraine and Russia, right? You got the war with Ukraine and Russia, right? That in itself has caused at least 7 other different problems. Like that's caused problems in oil, gas, natural gas, commodities, fucking you got wheat, grain, things of that sort, skyrocketing, all-time highs. You got gold hitting down there, all-time high, oils at 140, 130 a barrel, 130. I'm make sure I'm right because I know oil was coming down. So let's just check on oil, right? That's important. That is important. All right, so you got UK oil at 123, US oil at 119, right? We saw these huge price gaps to the upside, right? And then if we're just taking a look at this article right here, surge in prices of everything spells stagflation or recession, right? I'm gonna tell you why, right? So we already know that during the pandemic, not only the United States, so many other different governments, right? They gave out these stimulus, these quantitative easing, as it is, right? Quantitative easing, which in a sense is pretty much just a lot of borrowing money to help the economy stay afloat, right? We cut interest rates. Interest rates were near zero, I think like 0.25 basis points or something like that, or zero. And now going into 2022, we're getting into the part where, okay, we wound down quantitative easing. The Federal Reserve has already said, they are going to go ahead with rate hikes next week on the 16th. Today's March 7th, so March 16th. The Fed Reserve meeting is like March 15th through the 16th, with the rates coming out on the 16th, estimated at least 25 basis points, possible up to 50. But I do think they did go ahead and say they want to take a less aggressive route to combating inflation as it stands right now with where everything is going, especially when you have things like rising prices in gasoline, oil, food. All of these are very, 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 very important factors in an everyday person's life, right? You need gas to travel. Oil produces so many different byproducts like gas. And then you have, of course, food prices are surging. We have CPI coming out, and let's just take a look at that because. But first, let's take a look at, if I can find where I have it. I think this is it. Let's take a look at where inflation sits right now. All right, so currently we are at about 6%. So about 6%, right? We have this is our core inflation rate is about 6. I think other inflation rate is like 7.5. So core inflation, I believe, excludes automobiles and food. Let me confirm this. Like, sometimes I get them confused. Let's see. CPI, right? Okay. Consumer Price Index, CPI purchases, right? Change in prices. I think core CPI excludes, all right, not automobiles, food and energy. I think I was thinking of retail sales. I think retail sales excludes automobiles. But, right, food and energy, right? So we see estimated, right? So this is going to be our forecasted. We're forecasting, we've been higher. Higher is not necessarily good. Like, is it good for the currency? Yes, but it's not good for your pockets. It's not good for the money coming out of your wallet right now, right? So we see it's constantly been beating the forecast, which is not the best thing in the world. Like, Repeatedly. So we've seen we're estimating this to continue higher, 0.5, 0.8, right? So inflation is only going to get higher, right? Because I don't see a way that our inflation rate can come down right now. Calculating, so it's from previous months, so it's from February. And just with everything we got going on right now, I don't believe that's going to come out negative at all. I don't think there's a single soul who thinks that inflation has even started to take a dip. But one of the main things that's really, really crazy, really got to pay attention to is the rate hikes on the 16th. I'm going to tell you why that's so important. Because with these rate hikes, right, what the federal rate hike is, like the federal funds rate, right, what that essentially is doing, it's a tool to slow down the economy. It's literally used to slow down the economy. Inflation is high because they sent out all this money to pump up the economy. People were steady spending. You had supply chain shortages. So you had a lot of people go from not buying anything to all of a sudden now everybody wants to buy things. So it creates these bottlenecks in supply chains. We have docks that still have cargo ships that have been docked for months at a time, weeks at a time, right? With an abundance of product and goods, right? So when you tack in the supply chain bottlenecks with the increase of demand for a lot of things, but the decrease of supply for a lot of things, we see it creates this whirlwind of a fucked up economy, for lack of better terms. All right. So we're seeing the effects of this, right? We're seeing gas outrageously high, food prices outrageously high. Anything with a price tag is probably higher than it was last year. Guaranteed. Yeah. I don't even think a brisk is like 99 cents anymore. I think it's like 135 on the bottom. 135, right? So it just shows the increase that a lot of these sectors are having. And with the current conditions of what's going on in Russia, in Moscow, we do start to see the US take this embargo, right? Because let's see if they have the article here, right? Let's see if they have it here. Yesterday, the US announced it wants to potentially ban Russian oil coming into the United States, even though crude oil from Russia only made up like made up about 3% of like crude oil imports. We want to ban it, right? We want to start to really hurt the Russian economy by taking the money out of it, right? We see we've applied many sanctions. We've almost shut down two of the main banking institutions in Russia, which are, and actually I have a note here, 1 second. They have already started moving operations out of other parts of Europe, and those two banks are Sberbank and VTB Accounting, and they account for more than half of Russia's banking market, right? And we're already seeing these companies take a huge hit with sanctions, huge hit. And what this is doing is killing the Russian economy right now. Like the Russian currency is the ruble. The ruble is in a terrible position. And let's just see if we can pull it up. I may even have it here, or let's just try to pull it up. So we see terrible position, right? One Russian ruble is not even worth a penny in US currency, right? So it's in a terrible position right now. Probably won't be in a better position for a while, but all that plays a part in the US economy because of how these things go. Like Russia supplies over 40% natural gas to Europe. And I believe they supply, let me check my notes, you know what I'm saying? I want to make sure I'm telling you the right thing. They supply about, Russia provides Europe with about 40% of its natural gas and about 30% of its oil. Russia provides Germany specifically with almost 50% of its oil through the Nord Stream pipeline, right? The Nord Stream 2 pipeline is now, if you are unaware, do some more digging into that. The Nord Stream 2 pipeline is now probably being canceled as a project. Now, this is like an $11 billion project that was gonna be used to provide more sustainable natural gas energy to Europe. More specific, like we look at the Nord Stream pipeline, it goes straight to Germany, right? Provides let's see, they got the map here, right? So there's actually two. So there's first one and second one. We see they're both going into Germany. I believe it had a branch off to go somewhere else too. Neither here nor there. But we're seeing a lot of European countries wanting to limit their interactions and involvement with Russia, right? And since Russia really provides Europe with a lot of its natural gas, a lot of its oil, we're going to see the rollover effect in different economies, because now you're going to have different economies. You're already having different places like Germany, Italy, Sicily. They're all looking for different areas, different countries to get their oil and natural gas from. Because let's just look, right? Let's just look at the oil producer list. Top oil producer is going to be Saudi Arabia, if I'm not. Saudi Arabia and then Russia. That's not right. I was actually looking at this chart the other day. Actually, I know what I do. So we're seeing Russia is one of the world's biggest fossil fuel producers, yielding 12% of the global economy's oil. All right. And if we look at the oil export, this is what I was looking at. Saudi Arabia, right? Exported 17.2% of its. Russia 11, and we see everything else single digits. So we see Saudi Arabia and Russia are two main oil producers, or at least oil exporters. Saudi Arabia is the number one. Well, no, they're number one exporters and producers. What are we talking about here? So we're seeing a lot of these effects. Now let's just take a look in the market. I know a lot of talking. I think I talked enough. All right, so let's just take a look at the underlying effects of some of these things here, right? So we go to trade list, DXY, I should know. That's great. That's great. Looking at the daily, right? We've been seeing the conflict started around February 24th, which is around here in this area, right? We see prices just been skyrocketing, right? Because with everything that's going on, right, a lot of people are looking to put their money in the safe havens, right? So safe havens are things like the U.S. currency, gold, oil, because they know more than likely these assets are not coming down. Like we take a look at gold. I think gold is like 2K right now. Ounce. It was there earlier. So floating around 1900. Price of gold. We see the price of gold has absolutely taken off. In this huge trend, like we see gold hasn't been bullish, like necessarily. Like gold was, and what's crazy is I was waiting on this breakout of this bearish flag. I just wasn't expecting war to be the overall driver of it, but it makes sense. It makes sense, right? Like war breeds uncertainty. If we look at our markets here, U.S. markets, NASDAQ 100, SPF 500, US 30, we see we all created highs early on in the year, first week of the year. And we have not been in these highs at all since, nowhere near. We're constantly rolling over. And it's because a lot of the market has fear. When you have fear in the market, a lot of times you take your money out of the market because you don't want to lose your money. So you're like, okay, and able to not lose my money, let me withdraw my money, right? Let me put in things like bonds. I forgot bonds, gold, silver, things like that. Things are typically looked at and valued as safe havens, right, for your money. So we're seeing this over underlying effect of not only the conflict with Russia, but the conflict that U.S. has in this finance system right now with Fed raising rates. A lot of investors are unsure of how this is going to affect. Well, no, they're sure. They're both sure and unsure how this is going to affect stocks. The years of 2020, 2021 with like huge rapid growth, that's just pretty much done now, right? We're not going to see too much of that high value rapid growth. Now we're going to be seeing more things and growth like value stocks with interest rates going up, right? So like banking, oil, mining, gas, you know what I'm saying? Renewable energy, things of this sort, things that have actually hold a good, decent value, right? And the one that's taking a hit most out of everything is our NASDAQ 100 because we are seeing people are withdrawing their profits or their money from these high growth tech stocks that they were in 2020, 2021. And now they're transitioning over to safe havens. And that's just what we're having. A lot of people, some people aren't even switching over to safe havens. They're just not putting their money in the market, which is not the worst idea. Like, especially like with everything we have going on right now, like literally there's so much, like prices are ridiculous right now. Like I think wheat, last time I checked, which was like Friday, wheat was up over 30% on the day, on the year of increase in price. And that's just mainly due to this conflict. Like one of the main exports of Ukraine, I'm pretty sure, is wheat. That's another thing, right? Understanding what countries produce and export. That'll give you an understanding. Like, okay, if you see Russia, like, let's just say before this whole thing, if you knew Russia was the biggest producer of oil, I'm not gonna lie, that was something I learned not recently, but like that's a more recent discovery, like within the last like 3 months. Like I learned that it was just something I didn't think about. Like I knew Saudi Arabia, I just didn't think Russia. But if we look right, iron, steel, I had a chart. There was something I was looking at that was an actual chart, and it showed how much of these goods were actually being exported. Right, keep it here, let's just go back to the markets. I'm good at this part. Good at both parts. I'm better at this part, right? So we're seeing dollar shoot up, which is gonna cause things like AUD shooting down, Euro USD going down, GU going down, NZ. Everything traded against the US dollar is going to be going down, and the US dollar trading against everything else is going to be going up, right? Look at this one. Nice setup. Damn. Gotta start looking at some more of these charts. Cryptos have been like really bears. Like if you look at the market, anything that's not a safe haven is bearish. Like we see that. Bitcoin, Ethereum, both bearish. Stock market, US 30, Dow Jones 30, bearish. NASDAQ 100, bearish. SPF 500, bearish. Treasury bonds, higher highs, higher lows. UK 100, damn, bearish. Oil, increasing, commodity. Oil, increasing, commodity. Gold, increasing, safe haven. Silver, increasing, safe haven, right? Let's see. Yeah, that's all. Also, yeah. So just taking a look at this, right? Let's just break down a few markets. When it comes to you, whoa, I'm doing. This will come to the US dollar, right? We're seeing price higher highs, higher lows. Next resistance level is 100. So really, we're just waiting to see how price reacts to this level, and then want to see if we can get a rollover back to the downside, or if we can not a rollover, but a retest of this broken level of resistance. But if we take a look on the daily, we see price has not been given. It didn't give us a solid retest on this last break of resistance. So I'm not crossing my fingers for this one. I will say I will look for maybe a mid-range point of maybe like 98,500, 98 for a level of retest. But honestly, above that, like I'm not expecting too much of a pullback in US dollar, right? When we see market did open up with a gap, we have several gaps actually. So gap here, yet to be filled. We also have a gap here that is yet to be filled. All right. This is market open. Just gaps. Like we're seeing literally these huge gaps in prices. That price is not filling. Make sure we have this huge gap here, but price did manage to fill that. Looking at BXY, which is the British Pound Dollar Index, right? We've seen, looking at it on daily, bring to this chart. We're seeing a downward channel. We're seeing right now we're getting near this trend line support. With Tom's right now, honestly, like I respect trend line supports, but I don't respect trend line supports, right? And I'm more so just basing things off where price has previously been rejecting, right? So like might start to look at this level here, potentially this level here for sure, right? Other levels if we do get a break below this. So when we're looking at these two things, right, we're seeing the US dollar go up, British pound go down. Let's look at the underlying effect that has on GU down, right? Clearly. So GU was moving, in this downward moving channel, right? But now we're seeing price was managing to kind of catch support at this 1.3400 level. But price has broken through, I believe broke through Thursday of last week, right? We broke through Thursday. Now we're just seeing price roll over to the downside with potential of hitting this 1.300 zone or 3000 zone, right? Which is this zone right here. We see this zone has acted as a major level previously. So we're just gonna see how that continues to play out. Same with GJ, right? We see GJ It's a little messy there. DJ is pretty simple chart. So we see been moving up, kind of had this major resistance over here where we've seen price really has just been bouncing back and forth between these two zones. All right. And now we're seeing the potential rollover back to the downside to this 150 support level. And from here, we may see a potential buy opportunity. But as it stands right now, we're bearish until we get to this level down here, which is, I think, about like 200 pips away or something like that. Yeah, about 180, 150, 180 pips away to the downside. Same with EU, right? So looking at EU daily, out. Pretty simple. We're bearish. So since we're bearish, we're going to continue looking for bearish opportunities unless we're starting to see a break of structure to the upside. So I would really need to see a break of structure to the upside here. Clearly, we're not seeing that on the daily. I don't know, right? So we're seeing price is kind of nearing this zone, which has, let me confirm, acting as a support zone. Yeah, so we see price made support here back in March. So this is actually the lowest Euro USD. Euro USD has been since the pandemic start, right? So we see just where pandemic started, we managed to see price push up. Very nice movement to the upside, double top roller to the downside. Now we're back at this level of lows where price was at the pandemic start, right? So we can see possibly a bounce here, or we could continue to see price roll over to the downside, testing this 1.05000 level, which is a major level. Like this is a major weekly level here. Like we see, like there's not too many levels past it. So it does bring some concern, in my personal opinion, for what's going on in the economy. And which is why the main thing I had here was surging prices and the risk of recession, right? So you typically, a recession, I believe, is signal when you have 2 consecutive quarters of decreasing GDP, right? So your gross domestic product, so the products you're typically exporting out of your country. And we're seeing with the way prices are right now, with the way economies are right now, economies are already battered from COVID, right? Which is still around. Let's not get that confused. Even though, of course, it's no longer a topic of conversation, ironically now, no one knows what COVID is. But COVID is still around. COVID is still having an effect on markets, still having an effect on jobs, and it's still going to have an effect on, it's still going to have an effect on policies moving forward, I should say, right? They're still going to think of, what about COVID? What about, you know what I'm saying, keeping the people safe? So what our situation essentially is right now, to sum it all up, and one, I know we was a little everywhere, to sum it all up right now, right, on what I feel, just me, personal opinion. I can only give you my opinion for real. Is you're having this war where Russia and Ukraine have a rollover effect in different countries, not only because you're having other countries get involved, but because of the underlying assets that are directly involved within this war. Wheat, you know how many things wheat go into? Grain, oil, natural gas, right? Now, a lot of these effects will mainly take part in Europe, but those price changes in Europe, if they have to go outsource to a different country for different oil, different gas, the more than likely the price is going to be higher, which is going to have a cost. Someone's going to have to pay. And there's going to be everyone, because they're going to raise prices on taxes, more than likely, things like taxes, things like food, things like buying oil, gas. The price of that would be higher, which would cause a rollover effect in other areas, right? Everything is intertwined in itself, right? So if prices start going up in Europe, they're going to start going up for us because of all the things that we import to Europe, right? Things like that. And what kind of is the problem now that we're seeing with these economies is that if this war continues to drag on, if the price of oil continues to go high, like we're not going to be, if Russia supplies you with damn near 40% of anything, if anyone supplies you with 40% of anything, that is not easy to just cut off, especially when we're talking about natural gas and oil, right? That's not something you can, I'm gonna go over here and get that. Like, for instance, Germany, did you know 50% of Germany is literally powered by gas? A lot of the electricity is literally powered by gas, straight to the house, gas pipes. So if Russia cuts off that gas pipe, let's just say tomorrow to Germany, think about the effect that would not only have on Germany and German citizens, but Europe and the US, because we're going to get involved. Europe's going to get involved. Other countries are going to get involved, right? This is going to cause a problem. It's going to cause a problem for prices, going to cause a problem for people. It's going to be a problem, okay? Everything right now is, just look at it as you don't know what's going to happen next. To be honest. Almost forgot. Another thing. So both Ukraine and Russia have lost their trade insurance, right? So I just really learned what this trade insurance is. I'm not gonna lie to you guys. I really just kind of got informed on it. But in essence, trade insurance, let's just say you're an importer, you're a company in US, right? And you're buying, let's just say you need to import goods from Italy. This company, pretty much, I forgot what the name of this company is called. It is the International Insurance Policy of Goods, right? So you'll pay your upfront costs. Boom, if you don't get your goods, you're able to file an insurance claim, get your money back, right? For the exporter, let's just say they're shipping goods. Theirs works a little bit differently, but essentially what this is if anything happens to the goods, they get damaged, anything outside of their direct control, they can get reimbursed to be able to provide more goods to that customer who paid for them over in US, right? So both Ukraine and Russia have lost that trade insurance, right? It goes off like pretty much a rating, like, is this country good to trade with? Do they have good reputation with paying debts, paying services, shipping goods, blah, 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 blah. Well, with everything going on, don't nobody want to mess with them right now, especially Russia. No one wants to really deal with Russia. A lot of companies are pulling out of Russia, pulling their services out of Russia, like Netflix stopped services, Uber stopped services. You're seeing Visa and MasterCard stop. Visa and MasterCard stop services. Do you understand the implications that brings to an economy? Crazy, right? Credit bureaus, done, right? And then when you add on top this non-trade insurance, right, for this country, pretty much what that is like a sanction and a ban without it being a sanction, in a sense. Because now you're gonna have companies that are like, I don't want to get this good from you because now I'm not insured. If something goes wrong, I'm asked out. No one, like, if you're paying hundreds of thousands or millions of dollars to get goods from Russia, but they were insured, you're good. But now having that same energy, paying hundreds of $1,000s to Russia for goods that you probably won't get because they were actually, for a fact, no Russian cargo ship, like nothing can come to US. We have a ban on like almost all Russian goods. So there's so many, and a lot of countries have this ban, like they're not accepting Russian goods, like they're blacklisting Russia. So in a sense, what you're seeing is the rollover effect. That's why you're seeing oil super, super high. Gas prices super, super high. A lot of markets are in turmoil trying to figure out what is our next move because it's a global superpower. Let's be honest. Russia is a huge global superpower. And it's not the easiest thing to cut a global superpower out of an economy or out of, you know what I'm saying, the commerce market without it having a huge ripple effect on the commerce market. So like right now they're trying to figure out how can we stop supporting Russia in this war by buying oil without severely crippling markets by just saying no oil from Russia. You know what I'm saying? It's a tight line. It's literally a tight line to walk in. Like, I am not, what is the word I'm looking for? I would not be eager to be in any type of political decision, political power to make a decision. Like, everything right now is literally like a double-edged sword. There's not too many win-win situations. Someone's gonna be losing, and oftentimes it's gonna be the people. It's gonna be the people. Like, we're gonna be the one paying for everything that's going on right now. So, I mean, essentially, you just have to, if you're trading, you just gotta stay aware of everything that's going on, right? Market Watch, investing.com, Daily FX, FX Street, CNN, CNBC. If you got a Bloomberg account, Bloomberg, I just got this. I'm kind of excited. But you have to stay up to date on what's going on because every single day is different. It's kind of like trading with COVID, except worse because you still got COVID. Like, it's like COVID 2.0 because now it's war. Now there's war. There's no better way to say it than it's war. Like, you know what I'm saying? It's a terrible time in the world. Lives are being lost on both sides, which is a terrible tragedy. And there's no diplomatic resolution in the near future. Like, as it stands right now, Russia is just like, fuck Europe, fuck the US, definitely fuck Ukraine. I'm gonna do what I want, and we're gonna deal with wherever later, right? So, tough situations to be in right now, but it's cool. It's good. Like, everything's good. Everything's gonna be okay. Everything's gonna be okay, guys. I might actually make this like. Everything's gonna be okay. So we just have to take that into consideration, especially like and looking at the markets. It's Monday, so I really don't like trading too much on Monday, just because I like to let all the news catch up with everything. So tomorrow will be another trade. Now I might make another video tomorrow. What's that? On the 8th. And we're gonna see what we got going on the 8th. But honestly, that's it for this video. If you like the content, like, subscribe to the channel, leave a comment. You know, it's greatly appreciated. Eventually, I will get better at this. But I like it. It's fun. I just sit here talking. Whoever watch it. Whoever don't, I don't care. But with that being said, man, I hope you're able, if you are trading or if you're just literally watching this to learn some shit, I hope you are able to navigate these current conditions well. Yeah, I wish you the best moving forward. Because it's gonna get a lot, I won't say a lot worse, but the general ideology right now, the general stigma is it's gonna get worse before it gets better. So we gotta prepare for what worse is. And we gotta navigate it how we navigate it. You know, our generation is definitely seeing a lot more crisis than I would have prepared for. Like, what is this, like our third financial crisis? Our like fourth war, you know, it's all good. But peace and hair grease. I'm gonna see you on the flip side, and don't do anything I wouldn't do.